Today we are going to start a new chapter, chapter number 4, retirement of partner. Meaning of retirement of partner. What do you mean by retirement? See, when one or more partner leaves the firm and the remaining partners or continuing partner continue to do the business activity of the firm, it's known as retirement. That means one partner of the amongst the partners retires from the firm and other partners continuing the business activity is called retirement of the firm. Now following adjustments are to be needed at the time of retirement. In that, number 1, calculation of new ratio, that is new profit sharing ratio and gain ratio. Why gain ratio? Because when new partner enter in a firm, so because other partners enjoys the ratio. Second, continuing accounting treatment of goodwill, like we have seen in admission of partner. Third is accounting treatment of accumulated profit and reserves, which have seen in admission of partner. And the fourth part, accounting treatment of revaluation of assets and reassessments of liabilities. This part is also have seen in admission. And the last one is payment of retiring partner. How much share we have to give to retiring partner, adjustment of capital, which we have seen in admission of partner. Very first, we are going to see a calculation of new profit sharing ratio and gaining ratio. How to calculate new profit sharing ratio? In that, we have two methods. Number 1, on retirement of partner, his existing shares is taken up by the कंटिन्यूइंग पार्टनर. दैट मीन्स जो पार्टनर हमारे पास से रिटायर हो गया है उसका शेयर कौन लेगा? कंटिन्यूइंग पार्टनर लेंगे एंड दे विल शेयर. दैट मीन्स रिटायरिंग पार्टनर अपना शेयर क्या करता है? कंटिन्यूइंग पार्टनर्स के साथ एडजस्ट करता है. तो उस रेशियो को कहते हैं हम लोग गेन रेशियो. सो न्यू प्रॉफिट शेयरिंग रेशियो इज इक्वल्स टू ओल्ड रेशियो इन टू रिटायरिंग old ratio plus acquired share from retiring partner. Old ratio plus acquiring share from retiring partner. And gain ratio is equals to, when gain ratio just now I have explained, when one partner retires or deaths, his share of profit is taken over by the remaining partner in a gaining profit ratio. Our gain ratio formula is, gain ratio is equals to new ratio minus old ratio. Gain ratio is equals to new ratio minus old ratio. These are the two formulas for calculating a new profit sharing ratio. Now there are two types of new profit sharing ratio. When nothing is mentioned or stated about the new profit sharing ratio in the question, so we will calculate the ratio by cancelling the retiring partner share. And the second method is when old partner acquires the retiring partner share in particular ratio. This method is not in your textbook, only we have to see first one, when nothing is mentioned or stated about the new partners sharing ratio. So how to calculate the ratio? See the example. In that example we clear A and B, partner A, B and C are the partners sharing profits and losses in the ratio 5:3:1, and find out the new profit sharing ratio and gain ratio of the partner. Okay, now see old ratio of A, B, C. Old ratio of partners A, B, C is 5:3:1. Old ratio is, now we have to calculate a new profit sharing ratio or gain ratio. See the solution. In that we have partners A, B, C, and we know the ratio of old partner is 5:3:1. Who is retiring the firm? A is retiring the firm. So A is retiring the firm. So for new ratio we have to write the same ratio like 5:3:1, and see A retires, so we have to deduct the share of A. So what is remaining? 3:1 is remaining. So our new ratio will be 3:1. Always remember, the partner who retires from the firm, we have to deduct their share and we will get the new ratio. This method we have to follow in our state government textbook, how to calculate gain ratio. Now see, this is a method to calculate a new ratio. Now how to calculate a gain ratio? For gain ratio we have formula. gain ratio is equals to new ratio minus old ratio. See, A partner retires from the firm, so we will calculate gain ratio of partner B and C. So for B, new ratio is 3 upon 4 and old ratio is 3 upon 9. So make a denominator equal, LCM will be 36, 4 into 9, 36. Cross multiply 27 minus 12, so 15. Same, we have to calculate a ratio for C, partner C. New ratio is 1 upon 4 and the old ratio is 1 upon 9. 1 upon 4 minus 1 upon 9, it gives 5 upon 36. So our ratio is 15 into 5, it will be cancelled, reduces. So 5 ones are 5, 5 threes are. So gain ratio will be 3 is to 1, or we can say 15 is to 5. 3 is to 1 or 15 is to 5. Here I hope you clear how to calculate new ratio or gain ratio, and this method is required for calculation of when goodwill raise. Goodwill raise in this is required for the method to adjustment of goodwill. Okay, understood? Now we are going to start our second topic, accounting treatment of goodwill. As we know, when partner retire from the business, so we have to give their share accumulated profit as well as goodwill to the retiring partner. So how much share we should give, that we have to see a treatment of goodwill. See in this example, there are the partnership of 4 person, 1 person retires, so we have to give profit share as well as goodwill, some amount of goodwill to person as a share of goodwill. That is called a goodwill treatment. Now there are some steps. As we seen the adjustment of goodwill in admission, likewise we have 5 cases in the retirement. In that, number 1, when goodwill of entire firm is raised and retained in the business. When firm's goodwill raised and retained in business, so what will be treatment, journal entry treatment for distribution of goodwill amongst the partner. So entry will be goodwill account debit to all partners capital account. Goodwill account debit to all partners capital account. That means when firm's goodwill raise, that goodwill we have to distribute amongst all the partners in the old ratio. Whether it is retiring partner or existing partner, we have to distribute all the goodwill amongst all the partner, existing as well as retiring. Understood? First case is when goodwill of the firm raised and retained. Second case, when goodwill of the firm is raised and written off. When goodwill raised and written off, in that case we have 2 entries. Number 1, goodwill account debit to all partners capital account. That means we have to distribute the goodwill amount amongst the all partner in the old ratio. And the second entry for written off of goodwill, second entry is continuing partners capital account debit to goodwill account. Continuing partners capital account debit to goodwill account. Continuing partner, the partners who is existing who is continuing the business, and they will get a goodwill share. So they will distribute the goodwill amount amongst a new ratio, new profit sharing ratio. For this we required a new profit sharing ratio. So second case, when goodwill raised and written off, in that case we have 2 entries. Number 1, goodwill account debit to all partners capital account, and second entry, continuing partners capital account debit to goodwill account. Now the third case, when goodwill raised to the extent of retiring partner share and it is retained in the business, that means goodwill raised to the extent, that means retiring partner के share the goodwill क्या हो रही है, raise हो रही है. In that case we have only 1 entry, and the entry is goodwill account debit to retiring partners capital account. Goodwill account debit to retiring partners capital account. Goodwill account debit to retiring partners capital account. Now the fourth case, when goodwill raised to the extent of retiring partner and it is written off. When goodwill raised to the extent of retiring partner and written off, in that case we have 2 entry. Number 1, goodwill account debit to retiring partners capital account, and number 2, containing partners capital account debit to goodwill account. वेरी फर्स्ट एंट्री, गुडविल जितना भी रेज हुआ है वो सिर्फ किसको जाएगा, रिटायरिंग पार्टनर को, और जो पार्टनर्स कंटिन्यूएशन में है वो पार्टनर्स क्या करेंगे, गुडविल को डिस्ट्रीब्यूट करेंगे न्यू रेशियो में. हियर वी हैव कंप्लीटेड फोर केस व्हेन गुडविल already appear in a new balance, already appear in an old balance sheet. So how to treat that? In admission we treat like an asset. If asset increases, so we will write the amount in revaluation account credit side. If asset decreases, revaluation account debit side. But in retirement, when goodwill valued or changed or already appear in an old balance sheet, so difference of the goodwill which is appear in an old balance sheet or in adjustment, so that difference we have to adjust in revaluation account, or we can say profit and loss adjustment account. And second effect will be in partners capital or current account. We have to pass the second effect, partners capital. That means either we have to adjust in revaluation account or either we have to adjust in partners capital or current account. Here we have completed all the 5 adjustment of goodwill. Very first we have seen when goodwill of the firm raised, in that case we have only one entry. Entry is goodwill account debit to all partners capital account. In that case we have to write the amount of goodwill in balance sheet asset side. Second case, when goodwill raised and written off by the partner. So in that case we have 2 entries. Number 1, goodwill account debit to all partners capital account. Number 2, continuing partners capital account debit to goodwill account. Okay, when continuing, we distribute the amount in continuing partners capital account, so we have to calculate a new ratio. Now the third case we have seen when goodwill raised to the extent of retiring partner. So in that case we have only one entry, goodwill account debit to retiring partners capital account. So amount of goodwill account or the goodwill amount we have to write in the new balance sheet asset side. And the fourth case, when goodwill raised to the extent of retiring partner and written off, in that case we have 2 entry. Number 1, goodwill account debit to retiring partners capital account, and number 2, continuing partners capital account debit to goodwill account. And the fifth, when goodwill already appear in a old balance sheet, so difference we have to adjust in revaluation account or partners capital account. Now till now we have seen how to calculate new profit sharing ratio, treatment of goodwill. Now the third part is treatment of accumulated profits and reserves. Accumulated profit and reserve we have to distribute amongst the partner. Which partner? All partner. Because here person is retiring from the firm, so we have to give the profit or the reserve to all partners. Okay, you have seen in balance sheet many reserves are there. See, general reserve, liability side we have seen the general reserve, profit and loss, contingency reserve, worksman compensation reserve, investment fluctuation reserve, and asset side we have profit and loss. So when these losses are appear in balance sheet asset side and profits are appear in balance sheet liability side. So we have to distribute accumulated profits and reserves amongst the all partner. That means partners who is continuing the business and in their old ratio, that is their profit sharing ratio. Okay, so when we distribute general reserve, profit and loss, contingency reserve, so that are the credit balances. Liability side, that means it gives a credit balance. When we distribute that, we have to debit. For the transfer of profit and reserves, we have entry. The entry is partners general reserves account debit, profit and loss account debit, or other reserves account debit to all partners capital account, or we can say all partners. All partners means जो हमारे continuation में business में थे. So reserves account debit, profit and loss account debit to all partners capital account. When we distribute profits and losses or deferred revenue expenses which appears in balance sheet asset side, that has debit balances, so we have to credit. When we distribute that losses, accumulated losses, so we have to pass entry like this: all partners capital account or current account debit to advertisement expenses, or we can say to profit and loss account. That means now the next concept is amount payable to retiring partner. As we know that when person retires from the business, so he or she taken their share from the business. So how we we will pay amount to retiring partner? See, there are 2 or 3 methods for giving amount to the retiring partner. So very first method is lump sum method. What is lump sum method? We are giving a full amount which retiring partners contributed in our business, and we are giving at one time all the amount to the person. So that's called lump sum. At one time we are paying all the amount which he is contributed in our business. So when we are giving full amount, so entry retiring partner's capital account debit, because retiring partner is a receiver. And what goes out from the business? Obviously we are paying back, so that means we are giving cash. So what goes out? Cash goes out. So our entry will be retiring partner's capital account debit to cash and bank account. This is first method, when we are paying to retiring partner at lump sum. Second method is installment method. Installment method, in that we are not giving a full amount to retiring partner. We are giving amount in some installment. That means we are paying monthly installment. We are discussed with the retiring partner. We are not giving your amount at full, at lump sum, because we don't have that much finance. So we will giving amount to the installment. So for the timing, you will not our partner, you will be our as a loan holder. So we will transfer all the amount of retiring partner's capital in their loan, in his loan account. Understood? In his loan account. So when we paid amount in installment, in that case we have two entry. Very first we have to give some installment ना, हम कुछ installment pay कर रहे हैं उसको. So when we give installment, so entry will be retiring partner's capital account debit to cash and bank account. And when we transfer his or her amount in loan account, at that time entry will be retiring partner's capital account debit to retiring partner's loan account. That means until and unless we have paid the amount of retiring partner, he never remove from the business. He will be remain in a business, but as a liability holder. Understood? As a liability holder, that means we have taken a loan from him or her. Okay, because we have that amount we have to pay to the retiring partner. That is called installment. Okay, so here whenever, now the third case is nothing is paid to retiring partner, all amount of capital of retiring partner transferred to loan account. So in that case we have only one entry, retiring partner's capital account debit to retiring partner's loan account. In that case zero amount, we are not paying a single penny to a retiring partner. That means we are not giving a single rupee to retiring partner. We are transferring all amount of capital to his or her loan account. So these are the three cases: when we are paying amount at lump sum, when we are paying amount at installment, and when we are not paying a single rupee to him or her. So when we are paying at lump sum, entry retiring partner's capital account debit to cash and bank account. When we are paying installment, how many entries? Two entry. Retiring partner's capital account debit to cash and bank. Second one, retiring partner's capital account debit to retiring partner's loan account. And when third case, when we are not paying a single rupee, so in that case entry will be retiring partner's capital account debit to retiring partner's loan account. Understood? So here we have completed the procedure or introduction of retirement of partner. When partner retired, how to calculate a new ratio, how to calculate a gain ratio, and when we have seen treatment of goodwill, cases of goodwill, then the revaluation of asset and reassessment of liability, and we have seen how to distribute the accumulated profits as well as accumulated losses, and the last we have seen when retiring partner retires, so how we have to pay amount to him or her. Understood? This is the introduction of retirement of partner. In the next video we will see how to solve retirement